Welcome to Cash Residuals. Many of you are here because you know there's a way to make more money in merchant processing without knocking on more doors or making more cold calls. One way that you can increase your residuals is by working in the small niche of high-risk merchant services. However, it's not quite as simple as working in high-risk merchant services. There are some tips and tricks that you will need to know before moving into that platform. We know that merchant services is an industry where we, as sales agents, are setting up business owners with credit card processing so that they're able to take payments for their sales. And there's lots of different ways that we can set up these business owners. So there's POS terminals, there's countertop terminals, and typically in the high-risk merchant services space, we work with e-commerce business and we work with virtual terminals. Virtual terminals are just an online gateway or an online platform that mimics what a countertop terminal or a POS system might do. And sometimes those gateways are even integrated into a POS system. And with these merchant services that we offer to business owners, they're able to take payments, and on the back end, we earn residuals. And then in high-risk merchant services, the residual split is quite a bit higher because, unfortunately for these business owners, because of the risk of their business, they often pay a higher rate or higher fees to go along with it, which is great for the merchant, even though it might not seem like it, and great for us as well. It's great for the merchant because these are merchants that have been declined multiple times. Most banks don't want to take the risk on their industry type, or they have poor credit, or they have too many businesses, or their tickets are way too high, or their volume is way too high. And standard banks take a look at these businesses and think, no, I'm not going to take a risk with those. And so high risk, what happens is even though these merchants are paying more money, they wouldn't have been able to accept credit cards anyway. And now I know you might be thinking, oh, well, they can just take Stripe or PayPal. No, these are not allowed. If they are a prohibited business by any normal bank, they will also be prohibited by Stripe, PayPal, and Square. Unfortunately, many merchants don't find that out until they've already signed up with one of those aggregators and then gotten terminated. And once they've gotten terminated with Stripe or Square, they don't know what to do. So they go the route of contacting a merchant services agent and then trying to get a regular account. And that's when they find out that they get declined again and again. And in the meantime, their credit is getting dinged, and the agents that are working with them really don't have any solutions for them. They just tell them you need to find a high-risk merchant processor. Well, that can be you. So today I'm going to give you some tips on what to expect when you move into the high-risk merchant services industry, and really how you can get started today. So there are some key industries that we want to look at, and then there's some key things that you need to know, and you need to set expectations for the merchants so that they know how this whole process works. We've been in this industry for a while, and even if you haven't, typically when you board a merchant services account, so the agent comes in, they meet a business owner, and the business owner says, yes, I want to sign up with credit card processing. We just collect a few documents, we send it to the underwriters, and typically within 48 hours, their account is approved and they're able to be up and processing right away. That is not the case for high-risk merchant services. There's a lot more due diligence on the front end, and that's so that merchants don't have their funds held on the back end. Clearly, these are merchants that are a little bit more risky, and that's why we're calling it high-risk merchant services. So the banks have realized that these merchants are a bit more risky, so they've increased the price. They've also increased how they vet them from the beginning, and then they've given parameters about how they can process. So typically what makes a business high risk are a few different things. First, they could be reputationally high risk. They might be in an industry that isn't deemed as mainstream as others. So firearms can fall into that. CBD, online tobacco. You can look at some adult things. Anything that you think might be reputably questionable, that often can fall into a high risk category. Another reason that merchants are high risk is because of their industry type typically has a lot of fraud in it. So industries that are in tech, like web development or SEO, where it's really difficult to promise a certain type of result, often are risky because customers are dissatisfied, or because people are selling services that they're really not trained to do. And so there's a high volume of merchants that sell services that really they're not equipped to sell. And so those industries as a whole have become deemed as high risk. And unfortunately, for the really great ones out there, the bad eggs have ruined their category, and so that they fall into that category, and it makes it very difficult. And oftentimes business owners have no idea that their category is high risk because they themselves are a legitimate business and know exactly what they're doing. And so they find out the hard way, they go through the underwriting process, and agents don't know. Especially if they're newer to the industry, they may not be aware that there are different categories of merchants out there, and they've not heard of high risk. And so they get this back and the bank says, oh no, we can't do anything like that. And they just don't know where to go. Another reason that a merchant might be considered high risk might be an individual designation. It might be because their credit is poor. It might be because their tickets are really high. So they have high individual tickets, and obviously that poses a real risk that if that sale gets lost or the customer charges back the ticket, then the bank stands to lose a large amount of money. Or if the volume is really high per month, typically a high volume would be anything above $20,000 per month, $20,000 per month. And a high ticket would be anything above $1,000. I mean, $1,000 is can be okay. It just depends on the industry type. But when we're starting to get to large volume or large tickets, those can be considered high risk. So those are the types of merchants you want to make sure that you start the process correct, because what ends up happening is very frustrating to the merchants because they have no idea. And like I said, their credit keeps getting dinged. They've been waiting and waiting. They're unable to take any types of credit cards, which oftentimes hinders their business because that's how their customers need to pay. And suggesting other alternatives like aggregators like Stripe or PayPal actually isn't great advice because they end up just getting terminated. And Stripe, PayPal, and Square can hold their funds, and they can hold their funds. Some of them are 180 days, some of them 210 days, and I don't know exactly on all of those. Not understanding how the industries work and how high-risk merchant services work and standard accounts work can actually be very damaging to businesses. A sales agent can ruin a business. If a business is unable to take payments for months at a time, that business is going to go out of business. And oftentimes what happens is an agent finds out, oh, I can take this high-risk merchant services, and they just find somebody who they can submit the application to. And I see this all the time. The application gets submitted and it gets stuck in underwriting and nobody knows what to do. The underwriters don't move it forward because they have so many apps coming in. And then the agent doesn't really know the questions to ask or the process to get that application moving forward or declined so that the merchant can move forward and figure out a different solution. So a bad sales agent or an untrained sales agent can really ruin a business. So this course is going to be designed so that you know how to make those applications move through underwriting, give the merchants answers, and get these merchants processing so that they're able to conduct business, and then you are able to collect residuals. There are a few different industries that typically are high risk, and these are the 6 that I would like to highlight today, and these are ones that you can target because they are looking for new processors or have been unable to find a processor. So CBD companies, doc prep, credit repair, web development, digital business services, so somebody who's setting up the digital stuff on the back end, and then travel. All of those are deemed as high risk. And what's interesting in the high risk industry is there's multiple different high risk banks, but many of them only accept certain industries. So working with somebody who understands where those applications need to be placed is really important. At Electronic Merchant Services, we've been working in the high-risk industry for 6 years. And actually, the high-risk industry hasn't existed for that many years. There were high-risk applications, they were just declined. There has been a huge wave of new industry types, especially in the digital world, as we move more and more to everything being e-commerce or online. And then the pandemic really pushed forward a lot of digital and e-commerce type businesses. Today, I want to give you 3 very specific tips on how to get an application approved and things that you need to let the merchant know ahead of time, because oftentimes what happens too is the merchant gets cold feet. They say, this is taking too long. I don't understand this process. Letting them know ahead of time what the process is is half the battle. They actually, once they know the process, they know what to expect. Oftentimes, that's all it takes to get an application approved. And then they also understand that when you come back and ask additional questions, they were expecting those additional questions. That is not something that happens typically in a standard account. If you have to come back and ask additional questions, that's usually the outlier, not the norm. So in high-risk merchant services, the very first thing that I like to tell merchants so that they're prepared, and this is a big one, is how long it takes. It is really a minimum of 10 to 14 days. Now, you may have been out there talking to other processors who do high-risk merchant services, and they tell you they can get it approved right away. Now, there are 1 or 2 accounts that maybe you can get approved right away, but after 6 years, it is rare that we can get anything approved in less than 2 weeks. That's because of the time it takes to collect the documents, the time it takes for the underwriters to review all of the documents and ask additional questions. There is always a site inspection for high-risk merchant services. There is always a phone call verification to make sure that the application isn't fraud to begin with. So those things take time, and then there's the gateway set up on the back end. So 2 weeks is a very minimal and realistic time frame to give to merchants, and that's business days, not 2 weeks, including weekends. So 14 business days. And I find that when merchants know that ahead of time, not only are they not calling constantly asking about the updates to their application, which would be fine, but they're also not worried that we're not following up with them. The second thing that I highly recommend is that you let merchants know what documents that they need ahead of time. Now, there are a minimum number of documents typically that are required in the very beginning just to get the process started, but that is not all that is needed. And saying, well, maybe they won't want it isn't the case. They always want the same documents. They always want a driver's license. They always want bank statements. And if business bank statements aren't available because it's a startup, they will require 3 months of personal statements. And if that is a deal breaker from the beginning, it's better for you to know that from the beginning from the merchant than wasting a whole bunch of time to find out that the merchant isn't going to give it to you. Something else that can be a deal breaker that is required is if there is previous processing. So they turn in their bank statements and there's clearly processing on those statements, even if the processing is Stripe, PayPal, or Square. Stripe, PayPal, and Square do not offer the correct type of bank statements that the processors are looking for. And so what happens is we often have to give the logins to those. Now, there's some that offer admin logins that the underwriters can look at it through an admin portal where they can't run transactions. Not all of them. And again, if that's a deal breaker, it's great to let the merchant know that ahead of time so that you're not wasting your time and they're not wasting their time. So processing statements, if they're available, are required every single time. Proof of business, so meaning like government documents, business licenses, EIN documents, articles of incorporation if they are an LLC or an S Corp or some type of corporation. Also, they need to have some sort of proof of business. Most businesses I deal with have a website. So if they have a website, that is their marketing material. But if they don't have a website, there needs to be something. There needs to be photos. There needs to be inventory, marketing materials. There has to be some way that they're proving that they get business. And then there may be additional documents that the underwriters will require after that. A driver's license, of course, they will have to prove who they are. And even if they can do a corporate resolution, there needs to be some way for them to verify the owner of the account. Now, depending on the different processors that you may board with, depending on the industry type, there's 2 different types of credit checks. There's a hard credit check and a soft credit check. And sometimes merchants are very concerned about that. So asking ahead of time to the processor for each industry type, pre-vetting is almost always a must, just so you know what's required. Now, the documents I just listed before are ones that are required for every application, no matter what they are. But sometimes there's additional documents required depending on the industry type. So pre-vetting is a great way to prevent time loss and a great way to help mitigate any problems that you might have having to go back to the merchant multiple times. You know, and I know that knowing the answers up front and being able to give all the information up front really sets you apart from other agents, because it shows how much you know, how much you're trying to get this process going. And of course, there's going to be hiccups or things that maybe you have to ask that you didn't know. But the more information you provide up front really gets that merchant on board to produce all the required items to move forward, because oftentimes that is what stalls a merchant application, is that the merchant isn't providing the required materials and the agent doesn't realize how exactly what to ask for. So sometimes there's documents that you have to ask for and the merchant actually just doesn't know what it is. So you need the articles of incorporation or the EIN doc. Being able to show an example of what that looks like, because maybe the merchant just forgot, they started their business a while ago, or that wasn't something they did, their business partner did. So that way you have ideas. Finding ways to prevent the stalling of the application is the most important, because once it gets stalled, it's really difficult to get that merchant motivated to go again. Now they've gotten 2 weeks into running their business without taking credit cards. They've figured out a different solution. Now they know credit cards would be a lot simpler, but sometimes when you're running a business, that headache of getting to the simpler just makes you stop doing it. So everything that we're doing in Cash Residuals is figuring out, how can we make these merchants get to the finish line? How can we help you as agents get to the finish line? And all of it starts with the communication at the very beginning. How we communicate to these merchants is the key to getting a high-risk merchant services account approved. Now you've got this account approved. You've got the gateway up and running. What does that mean to you? It really means a greater volume of residuals. Now, it does take longer to get an account boarded, so we're not looking at volumes of accounts getting boarded, but typically the residuals are 5 times more what you would get paid on a standard merchant account. We can look at the different numbers if you wanted to reach out to me individually, and I can explain to you, or you can show me what you typically make in residuals in basis points, and then I can show you what you typically would make in high-risk merchant services. But from all of the agents that I've worked with in the past, it's typically around 5 times what a standard merchant services agent has with their ISO office. Now, if you found value in the tips that I gave about how to board merchant service applications, I would love for you to join us with our Cash Residuals course that goes in depth in all the different tips and strategies on how to board merchant services, how to activate them, and then how to keep them long term. Also, how to find them. What would be the best avenue and the best route to find these different types of industries and merchants to get them boarded. There are certain tips and tricks that work really well, and I would love for you to join us in our course that goes over all of these.